What's going on, you guys? My name is Zach Hartley. Today is Sunday morning, September 20th. We are going to go through all of our technical analysis and our watch list for the week ahead, and I am going to give you all of the stocks that I am watching as well as the reason I am watching them. Here we go. Alright, you guys, so this is the sheet that I use for my watch list. It's basically a breakdown of all of the stocks that I like to look at on a regular basis. We got the tickers on the left hand side here. On the middle we have the status. Now we have three options here. You can either buy, watch, or avoid. Buy basically means I'm interested in getting into this stock right away. I see a setup, I see an indication that there might be a buying opportunity, so I'm going to select buy. When I click on watch, you can see the watch is yellow. It basically means the stock is trading sideways, there's not a clear direction, or there's not a clear pattern formed yet. And when I click on avoid, it basically means stay away from this stock. It's bearish, it's going down, it's not something we need to be watching consistently. So that's what I mean when I click on any of these three options. And then on the right side, you can see it says why. So this is basically my reasoning or my justification for why I chose it as a buy, a watch, or an avoid. So that's how I break it down. If you guys are interested in this sheet at all, you can download a copy of it for yourself at zachhartley.com. The link is below. Otherwise, you can get access to everything I have in here. I have an exact copy of this on my website as well, so definitely check it out, and you can get all of my analysis on all of these stocks. So without any further ado, let's jump into the charts. Okay, so like always, before we jump into individual stocks, let's first look at the indexes. So Dow Jones Industrial, as you can see, we made a really good attempt to reach the all-time highs prior to COVID. Unfortunately, we fell all the way back down, and now we're sitting on support that was established back in June. So it's looking okay there, it's not looking great. When we look at the Nasdaq, you can see we clearly broke through the all-time highs that were established prior to COVID, but we've had a big fallback in the last kind of 2 weeks here, and now we're sitting on support that was again established in July. So really interesting to see what's happening here. The Nasdaq shot way ahead of basically all of the industrials, but it's also had the biggest pullback in the last 2 or 3 weeks. When we look at the S&P 500, you can see basically the same thing. It broke through the all-time high prior to COVID, but it has also had a pretty substantial pullback, coming back into support that is below the high prior to COVID, and now it is nowhere near the lows at the bottom of COVID. However, it is a nice little pullback here. It could be an opportunity to get in long term, or this could be just the start of a new trend. So we'll have to wait and see what happens there, but without any further ado, let's jump into our tech stocks. The first one we wanted to look at was Apple. Now, I found Apple really interesting. As you can see, we'll zoom in here. As you can see here, so we broke through, we had a nice little earnings call. We peaked all the way up to almost $140, and then since then we've been coming back down to this 107, 109 area. And if we zoom in here to the 5-day 1-minute chart, what you'll notice is a really unique trend line where we can go all the way back to September 15th, and we can draw a straight line all the way to our closing, basically last hour of trading on Friday. So what's really unique here is we have a very clear bearish line here, but we also have major support here at the 106 level. So when I zoom out on this, let's go to the 3-month, you can see, let me get rid of that. You can see right here, we've got support at 106. So the price broke above 106 and it basically kind of tested here. This is where I think we're gonna have a little bit of support. And if we see a reversal, it's gonna be either at 106, or I think we're gonna see a very clear reversal at 100 if we break down this week. So my play on this one is if we see the bounce and we see the break above kind of that 110, 109 area, I'm probably gonna get back into Apple. If we see it continue down, I'm gonna wait till it hits to 100 and I'm gonna buy the bounce off 100. I highly doubt it is gonna break through the $100 mark. So that is my mindset on Apple. When we look at Shopify, we can see something kind of interesting here. So prior to June, we could see a high of around $840. We got all the way up to around $1,150, and then we've come all the way back down to the exactly at this $840 mark. The last 2 days have been very good for us. However, tech has been completely hammered over the last 2 weeks. So I'm a little hesitant getting into Shopify. However, I do like the support that we're seeing. We had 2 very green days. I'm going to zoom in here so that you can see these 2 green days that we had, because they were just fantastic. So we hit our low, we established a double bottom here at the 839 like 14, 839 40 level. Clear double bottom. We had a nice little gap up, came all the way back down and tested the support from the previous day, and then came back up to basically the high of the day. So what happens to Shopify on Monday is going to be a very clear indication of what I think is going to happen for the rest of the week. If we see it come back down, I'm going to be interested in buying it at $839.40 and buying it on the bounce. Otherwise, if it breaks through that $839 kind of 10, $839.20, then I'm probably out of this. I'm not really interested in it because I don't think there's much support holding Shopify up if tech continues to sell off. So that's my opinion on Shopify. Okay, so the next company I'm interested in is Very Good Food. Now, they only IPO'd back in basically June here, so they're an extremely new company. They basically IPO'd, shot up to about $2.50, came all the way back down to $1. About a month later, they had a high of $1.95. They came back down to about $1.07, and then came back up to a high of about $1.90, and now they're at about $1.70. So really interesting company, great business model, sort of like Beyond Meat, except instead of chemicals in a lab and cooking everything up with 500 ingredients, they basically turn beans into burger patties. So they do things a little bit differently, a little bit more simple. They're based out of Victoria. They just opened up a location in Vancouver, and they're growing pretty quickly. Their revenue is growing exponentially, and I really like the company long term. We are in a little bit of a sideways movement here, but if we can break through this $1.90 kind of $2 mark, I think the sky is the limit for this company. So I really like it. Okay, next company was Tesla. Now, I know this is probably one of the most talked about companies out there right now. It's one of my kind of all-time favorites, and I think it's a really interesting company right now, just because we have a couple things going on. So the share split just happened. A lot of people are down in their positions. A lot of people are selling out. It's a really interesting combination of retail investors as well as fundamental kind of long-term institutional investors right now. But what's big this week is the battery day that's coming out. And so Elon Musk is doing an announcement about their battery and what they can do with it and how great it is and all the new advancements they've made. And I think if it goes well, it could be a game changer for the company. It could pretty easily push it back up to those all-time highs where it was around that $500 mark. So I'm not saying it's a great investment. I'm not saying you're getting good value for your investment, but I am saying if battery day goes well, I expect the stock to go higher. That's what I'm saying in this statement. And if it happens, you may want to take advantage of that. That is all I'm saying. So the last companies that I want to touch on for today were these two here. Now, they're a little bit unique. So as you can see, Mind Med, they're based in Canada. They're actually a magic mushroom company. I shouldn't say that. They are a medicinal drug company that is focusing on the same chemical inside of magic mushrooms and trying to treat PTSD, depression, anxiety, and a large variety of different mental and physical stresses on your body. I don't know if that's the best way to say it, but they're basically taking the chemical from magic mushrooms and putting it into a drug, and their stock shot up from about 40 cents to 53 cents the other day. We're basically approaching a high that has been tested now for the third time, and it was previous support for that back in May. So really interesting time period for Mind Med. I also like another company doing a very similar thing. They're called Champignon Brands. They're basically the same exact concept and the same idea, except a little bit different business model. They have basically fallen for the last 2 months, and they're now sitting on support that was established back in April. So if you are considering getting into this company or diversifying with a couple of investments that might be a little bit more out there, these two companies might be a great opportunity for you. I think they're both kind of on the way up. They haven't quite hit mainstream yet, and I think they could be a great opportunity. So that is my watch list. If you guys got any value out of this video, please click that like and subscribe button. And if you're interested in downloading my Excel sheet, head over to my website and you can get that Excel sheet as well as a ton of other free resources, all completely free, dedicated to you. My only goal here is to help you make more money. So definitely head over, check out that website, and sign up for my courses on Skillshare, and I'll catch you guys later.